Chad, is there anything you do with the reopening plays, things like Uber, that kind of part of the market right now, or anything that, while these might be the sort of calmer ways to ride things out, there are some names that if you liked them, you might be able to buy 12% lower here?
Yeah, I think that we're about in the third inning of this revaluation issue that we're starting to see. Again, we're not anticipating, a massive 20% downdraft. But overall, some of the lower quality companies have completely spiked over the last, say, 6 to 9 months. That valuations are just not justified. So, Kelly, we would recommend that investors stay in this quality spectrum and look at those type of companies like the Johnson & Johnsons of the world. I mean, that company's trading at a 16 times multiple in a market multiple today of 22 times. Well-diversified product line, well-diversified customer base. I just see this as one of these seams of opportunities that if you have a 3 to 5 year time horizon, you could do really well and also get a rising dividend. And
then the third one was PepsiCo, which sort of speaks for itself. Everybody likes chips, everybody likes soda, everybody likes their kinds of I like the Stacy's pita chips, by the way. But at any rate, Chad, let me one final question on Johnson & Johnson. Johnson & Johnson had a spotless reputation for decades, going back to the Tylenol case, which was so brilliantly handled by Mr. Burke, the then CEO. But lately, this company has taken some, I think, bruises in how it is handled. For example, the talcum powder issue, some of the other things involving painkillers and so forth. You do not see those, let me call them scabs on the company, as disqualifying in any way.
So the reasoning behind us liking Johnson & Johnson is it has very little debt. And if you include all of those issues into the valuation as debt, and say you give a $30 or $35 billion penalty for it, even with a 3 to 5% revenue growth assumption, the company over the next 3 to 5 years should do quite well with very much lower volatility. Okay. So that's one of the things about these three companies. Very low debt, you could have those issues and still do quite well.
All right, Chad, thank you very much. We appreciate your time today. As always, good to see you.